Now we will take up the next standard for our discussion, and the next standard which we are going to talk about is SA 510. So which standard we'll try to discuss now? We'll try to discuss now SA 510. And what does SA 510 deal about? Initial audit engagements and opening balances. So let us try to understand what does SA 510 talk about. Okay, right. So SA 510, what is the title they are saying? The title of SA 510 says that initial audit engagements and also opening balances. So they are using two phrases. SA 510, the title of SA 510 is initial audit engagement and opening balances. See, first I will tell you objective. What is the main context this standard is going to speak about? The main context what the standard is going to talk about is your responsibilities regarding opening balances. As an auditor, when you are conducting audit of an entity, let us say for example, some client X Limited is there. For the financial year 23-24, this client has appointed you, a practicing chartered accountant, as an auditor. Now, there is no doubt when the client has appointed you for the financial year 23-24, there is no doubt should be there for you. Whatever transactions which have taken place during the financial year, from 1st of April 2023 till 31st of March 2024, whatever transactions which have taken place during the financial year, definitely 100% you will verify, no doubt about it. And also whatever balances are there which are existing as on 31st of March 2024, that also you will verify. Everybody will agree to that. So if you are appointed as an auditor for the financial year 23-24, there is no doubt as an auditor, you will verify all the transactions which have taken place during the year. And also you will compulsorily verify the balances as on the current year's balance sheet date. But now the question is, as an auditor, do you have any responsibility regarding opening balances? When it comes to transactions during the year, when it comes to closing balances, no one is having any doubt. You all will agree. But now my question is, if you are conducting audit of financial year 23-24, is there any requirement for you to work on opening balances also? Are you required to obtain some evidence regarding opening balances also? Why? Because these opening balances are something which are reflected from the last year's closing balances. When I say opening balances, these are last year's closing balances. No, last year's closing balances are already audited by someone else. So since you are conducting audit of the current year's audit, should you be concerned only with the current year transactions and current year closing balances, or there is any need for you to even verify the opening balances also? Come on, tell me guys. I will tell you what is that, what the standard says, whether we are responsible or not. I will talk about it later. But let me know what do you think? What is your point of view? What do you think? So you are also going to be auditors in the future, right? So just let me know what do you believe. So as an auditor, are we required to even get concerned about opening balances, or should we concentrate only on the transactions happened during the year for which we are appointed as an auditor and the closing balances? Tell me, what is your point of view? What will you do if you are an auditor? Step into the shoes of an auditor and tell me. Come on, guys, respond. Okay, very good. Yes, we do have a responsibility to even verify opening balances also. But what are that responsibilities? That we are going to understand in a detailed manner. Yes, we have some responsibilities regarding opening balances. Thank you for all your responses. The conclusion, the final statement which I want to make here is, yes, as an auditor, if you are conducting audit of one financial year, you will also have some responsibilities regarding opening balances. What are those responsibilities that this standard is going to explain us? Okay, right. So that is what we are going to learn. So we all got clear with agenda, what exactly we are going to discuss in this chapter, in this particular standard. I hope everybody got clear with that objective. Now, in the title of the standard, they are using two terms, initial audit engagement and opening balances. First, let us try to understand the meaning of both the terms. They are saying two terms, one is initial audit engagement and the other one is opening balances. Let us try to understand the meaning of both the terms. Okay. So first of all, what is the meaning of initial audit engagement? And if you are paying attention, this term initial audit engagement is not something which we are seeing for the first time. This term initial audit engagement, we have already coined it earlier. This term initial audit engagement, this is not something which we are discussing for the first time. This is something which we have already covered it as a part of our previous discussion. At some place I have covered it. Do you guys remember? And if any of you remember, can you respond back to me where we have come across this term initial audit engagements? Yes, I'm pretty much confident. I'm sure that we have definitely come across this term initial audit engagement. But I also want to know from you whether do you guys find this term familiar? Does it sound that we have already seen this earlier? If yes, when? Super Ashwant. Yeah, I got an answer. So Yashwant was saying, sir, we have seen it when we are discussing the letter of engagement. Very good. When we are discussing the chapter ethics and the terms of engagement, there we have come across this term initial audit engagement, sir. So there I was saying on the basis of auditor getting appointed, we can divide audits into two categories. One is a recurring audit engagement and the other one is initial audit engagement. So we have seen one concept. When you are required to send an engagement letter, again, when you are required to send engagement letter, in what circumstances you are required to send the new engagement letter in the case of recurring audits. So in order to explain that, before understanding that factors, I have explained what is recurring audit, what is initial audit, what is initial audit engagement. So there I told you in a simple manner. Recurring audit means if the last year auditor is conducting the audit of current year also, then we call such engagement as recurring audit. So 23-24 last year, a person has conducted the audit. A firm or individual has conducted the audit. If the same individual or firm is conducting the audit for the financial year 24-25 also, that we call it as recurring audit engagement. So then what do you mean by initial audit engagement? At that point of time, I told you that initial audit engagement refers to such an engagement where the last year financial statements were audited by somebody else. If you have to put it in a very layman terms, if you have to put it in very, very layman terms, in a very common language, if I have to keep it, if the last year auditor is different from the current year's auditor, if the last year's auditor is different from the current year's auditor, then such engagements, then in the current year, it becomes a initial audit engagement. Then it becomes an initial audit engagement. This is what the simple meaning, but technically they have defined this term initial audit engagement and how they have defined us. It refers to such an audit engagement where prior years were unaudited. Where the prior years were unaudited. That means last year was unaudited. That means last year financial statements are not audited, and the current year you are conducting the audit. That also I call it as initial audit engagement. Or prior year was audited. Or prior year was audited, but it was audited by predecessor auditor, different firm. So this is how the term initial audit engagement has been defined. See, simple meaning. Once again, even after analyzing this definition also, our simple meaning will sit in place. What did I say in the simple meaning? If the last year auditor and current year auditor, both are different firms, both are different entities, then the current year audit will become initial audit engagement. That's what I have told, right? More or less, you will try to find the same thing here. So like if you see, they say that initial audit engagement refers to such an engagement where last year was unaudited. Let us say, for example, current financial year is 24-25. Current year, they have appointed a practicing chartered accountant, an individual practicing chartered accountant, Mr. A has been appointed as auditor. 23-24, the last year was unaudited. No one did the audit for the last year. So current year will become an initial audit engagement. Or second case, let us say for example, 24-25, current year, they are appointing an audit firm ABC and Co. Last year audited, last financial year audited, 23-24 was audited, but it was not audited by current auditor. It was audited by predecessor auditor. Let us say, for example, some another firm, PQR and Co has done the audit of the previous year. So either last year's financial statements were unaudited, or even if they are audited, it was audited by a predecessor auditor, by a different auditor. Then the current year audit will become initial audit engagements. Okay. So now I will give you one scenario. You are required to tell me whether it is a initial audit engagement or recurring audit. I'm going to give you one example now. So you are required to respond back to me. Is that scenario gets covered under initial audit engagement, or will that scenario come under recurring audit engagement? You have to respond back to me. Okay. Let me put it this way. There is a firm, there is a company. Listen carefully. There is a company XYZ Limited. This company for the financial year 23-24, they have appointed a firm ABC and Co. An audit firm has been appointed as an auditor. And for this financial year 23-24, in this firm, 3 partners are there, but I have told not every partner will sign the audit report. One partner will come forward and take the responsibility on behalf of the entire firm. That partner, we generally call him as what? Engagement partner, we call him, right? Now, what happened is for the financial year 23-24, out of all the 3 partners, Mr. A came forward and acted as an engagement partner. He took the responsibility for the audit and even he's signing the auditor's report. Now, financial year 24-25, the same company XYZ Limited, they have appointed the same firm ABC and Co as an auditor for the financial year 23-24. But what they have done is they have appointed Mr. B as an engagement partner. They have appointed Mr. B as an what? Engagement partner. The firm is same, but the engagement partner, whoever is taking the responsibility and whoever is signing the report on behalf of the entire audit firm, is changing. Now, my question is whether this audit for the financial year 24-25, whether this audit for the financial year 24-25, will it be an initial audit engagement or will it be a recurring audit? What do you consider? Come on, I need a response from you all. I need a response from you all. So, what will be the 24-25's audit engagement? Will it be a recurring audit or will it be initial audit engagement? Very good, my dear students. It is a recurring audit only. It is a recurring audit only. It's not an initial audit engagement. Why? Why? Because here auditor, when I say auditor, I am referring to the entire audit firm here, no? So here auditor remained the same. Okay, engagement partner might have changed. See, when I say it as a different predecessor auditor means what? Altogether a different audit firm. If the audit firm is remaining the same, but just the engagement partners are changing, that we don't call it as initial audit engagement. So altogether audit firm should change. Then only we call it as initial audit engagement. Okay. So whatever it is, one term we have understood. Initial audit engagement, one of the term used in the title of the standard, that we got it clear. Now they are using one more term in the standard, in the title of the standard, which is what? Opening balances. Which is what? Opening balances. Now let us try to understand what is the definition of opening balances. This meanings, whatever I'm going to tell you now, those all might sound silly. Why? Because we are all aware of it. So when we were kids, when we were bachas, from that point of time, we are learning what is opening balance and all. Okay. So now I will tell you, it all might sound basic for you, but yeah, we have to learn these things. What is opening balance? Tell me, my dear students. You will say that, sir, opening balances are those balances which are existing at the beginning of the financial year. What you will say? Opening balances are those balances which are existing at the beginning of the financial year. So at the beginning of the financial year, without happening even a single, without giving effect to even a single transaction of the current year, whatever balances are there, that we call them as opening balances. Now, if I pass on extra information for you, one more thing I can say that these are something which are these are nothing but last year's closing balances. These are nothing but what? Last year's closing balances. Wow. Yeah. So opening balances are those balances which are there at the beginning of the financial year, and these are nothing but last year's closing balances. Okay, we all know it, sir. Then what else they say? So, and even one more thing they say that opening balances, regarding opening balances, few more things we have to be clear. So opening balances reflect two kinds of information. Opening balances reflect what information? So understood, opening balances are those balances which are at the beginning of the period, and these are nothing but derived from the last year's closing balances. Okay, everything is fine. But what information opening balances reflect? The standard says that opening balances reflect two important information. One is opening balance will reflect effect of transactions. Opening balances will reflect effect of transactions which has taken place in the preceding financial year. And also, opening balances will reflect accounting policies followed in the preceding financial year. Opening balances reflect two kinds of information. So, what is the two kinds of information? Very, very important, my dear students. So, opening balances reflect two kinds of information. What kinds of information will be reflected by opening balances? Number one, the effect of the transactions which have taken place. Opening balance is an effect of entire transaction which has taken place in the previous financial year. And also, opening balances will reflect accounting policies which are followed in the preceding financial year. Sir, what are they trying to say here? Let me give you one example to make you understand. Let us say, when I am saying opening balance of plant and machinery, opening balance of plant and machinery is 100 crore rupees. So when I say opening balance of plant and machinery, opening balance, that is opening balance on 1/4/2024 is 100 crores. Now what this 100 crores is representing? This 100 crore represent the effect of entire transactions after giving effect to entire previous year transactions. This is how the balance has been arrived. Let us say, for example, last year's opening balance was some 70, and they have acquired some new assets have been acquired which will come to 50, and for the previous year they have charged a depreciation some 20, and after giving effect to all the transactions, the plant and machinery closing balance for the last year has come to 100 crores, which has become the opening balance. So when I say 100 crores, this 100 crores is reflecting the effect of all the transactions which have taken place in the preceding year. Whatever transactions which have taken place in the entire preceding financial year, after giving effect to all the transactions, this 100 crores has come. And not just that, this opening balance is also reflecting what accounting policies were followed. Like in the previous, when you analyze that opening balance, you will get to know last year they have charged depreciation, but according to which method they have charged the depreciation. Did they follow SLM method of depreciation, or did they follow WTV method of depreciation, or did they follow any other methods? What is the residual value? What is the cost? And what useful life they have taken? So even all that information you can get to know from opening balances. Okay. So this is very, very important point. Once again, I'm telling you, when I say opening balances reflect two kinds of information. What are the two kinds of information that will be reflected? Number one, effect of transactions which have taken place in the past year. And not just that, it will also reflect what are the accounting policies which are followed in the preceding financial year. Okay. And one more thing, whenever I say opening balances, generally you will think that opening balances are those figures which are there in the balance sheet. No. Whenever I say opening balances, what you will imagine, guys, those balances which are there in the balance sheet, right? But not just that. When I say opening balances, it includes the amount even in the disclosures also. It includes the balances items in disclosures also. Basically, from notes to accounts also, you can get the opening balances. There, when I say opening balances, we generally have a notion that we generally have that feeling of when I say opening balances, I'm referring to balance sheet items. Not necessarily, guys. There could be some items in the notes to accounts which will also become opening balances. Let us say, for example, for the financial year 23-24, financial statements are prepared. They have prepared balance sheet, they have prepared P&L, they have prepared notes to accounts, a statement of changes in equity, statement of cash flows, everything they have included. So as on 31st of March. So now whatever balances which are there in the balance sheet, assets and liabilities, they will definitely become opening balances for the next year. Not just that, in the notes to accounts, if they are talking about certain items which are in the nature of balances, that also will become opening balances. Sir, what are you saying? Let me give you an example to make you understand. So let us say, for example, in the notes to accounts, the management has shown that they have a contingent liability. In the notes to accounts, they have shown that they have a contingent liability amounting to some 100 crores. Let us say, for example, they have a contingent liability of 100 crores. This they will not show it in the balance sheet. Where they will show it? They will show it in the notes to accounts. So even this contingent liability also will be opening balance for the next year. Okay. So once again, we have to change our perception now. Whenever we say opening balances, generally we get a feeling, the thing which will come to our mind is balance sheet only, but need not necessarily be. Sometimes whatever information which is there in the notes to accounts also will become my opening balances. Clear? So this is what the important discussion regarding opening balances meaning. So what we have understood regarding opening balances, these are the balances which are there at the beginning of the period, and these are something which are derived from the last year's closing balances. They reflect two important kinds of information. They reflect the effect of transactions which have taken place in the past year. Number two, they also reflect the accounting policies which are followed in the preceding financial year. And it includes not just items in the balance sheet, it also includes the items which are there in the disclosures, which are there in the notes to accounts. Comfortable, everybody? Guys, can you give me one quick response? Can you give me one quick response till here? Everybody comfortable with the discussion? Shall I proceed further now? Are you all with the flow? Are you all able to understand whatever I'm trying to say? Right. Good. Now, so proceeding further with the subsequent discussion. So now what SA5, now you tell me, now I'm asking you question once again. So do you think just in the previous part, whenever we had the introduction, you all have agreed that, yes, sir, as an auditor, we will have a responsibility regarding opening balances. So one responsibility which we all must acknowledge, one responsibility which we all must accept is that, so as an auditor, if I'm getting appointed as auditor for the financial year 24-25, there is no doubt I will verify all the transactions, whatever transactions which have taken place during the financial year, that will form part of my scope. I have to verify, no doubt about it. And also, I will be required to verify current year's closing balances. There is no doubt about it. No one will have a doubt that I am required to verify all the transactions which have taken place in the current year, that they will fall within my scope. And even I am required to verify the balances as on the current year's balance sheet, that will also 100% fall within my scope. Now the question is whether as an auditor you are required to obtain sufficient and appropriate audit evidence regarding opening balances also. As an auditor, are you required to obtain sufficient and appropriate audit evidence regarding opening balances also? The answer is the standard says yes. The standard says yes. So as an auditor, it will not just be enough if you obtain sufficient and appropriate audit evidence in the case of current year's transactions and closing balances. 100% there is a responsibility on you to verify, even to obtain sufficient and appropriate audit evidence regarding opening balances, that they are not materially misstated. Why? Because no matter how correctly the entity has accounted for current year transactions, no matter how correctly the entity has accounted for current year transactions, if there is a material misstatement in the opening balances, compulsorily current year's closing balances also will have a material misstatement. Obviously, right? So if you have, let us say for example, if I verified 100% transactions of the current year, so they have accounted for 100% correctly for the current year transactions. But if they have made any mistake in the opening balances, if there is any material misstatement in the opening balances, that will definitely be carried forward in the closing balances also. So that's why just if you obtain audit evidence regarding current year transactions, it alone will not be enough. Even you need to obtain audit evidence regarding sufficient and appropriate audit evidence regarding opening balances. And what SA 510 specifically says here is, in case of recurring audit, even if you don't verify the opening balances also, it is fine. In case of recurring audit, even if you don't verify the opening balances also, it is fine. It is okay. But in the case of initial audit engagement, it is not okay if you skip the opening balances. That's what SA 510 specifically says. So SA 510 is insisting so much that in the case of initial audit engagements, there is a compulsory responsibility on you to obtain sufficient and appropriate audit evidence regarding opening balances. In the case of recurring audit engagement, even if you don't do it also, okay, standard did not insist you. But in the specific terms in SA 510, they have insisted if you are conducting an initial audit engagement where the last year auditor is not you, then there is 100% responsibility on you to obtain sufficient and appropriate audit evidence regarding opening balances, especially in the case of initial audit engagement, because the logic is very simple. Last year you are not the person who have conducted the audit, then definitely have to be pretty careful there whether last year balances are correctly brought forward in the current year or not. So that's what the standard is specifically insisting. So it only puts a lot of emphasis on initial audit engagement. If you are doing initial audit engagement, there is 100% responsibility on you to obtain audit evidence regarding opening balances. You can't skip it. Okay. So how do you obtain sufficient? And one thing has become very clear. Okay. As per SA 510, while conducting the initial audit engagement, I need to obtain sufficient and appropriate audit evidence regarding opening balances, whether they contain a material misstatement or not. This is what objective of the auditor as per SA 510. We have two objectives. First, we will try to complete the first objective. So objective number 1, the first objective, the what objective the SA 510 is putting on the auditor is, in case as an auditor, if you are conducting an audit of initial audit engagement, there is a responsibility on the auditor to obtain sufficient and appropriate audit evidence, whether there is any material misstatement in the opening balances or not. You need to obtain audit evidence, especially in the case of initial audit engagements. That is one of the objective. Now, how can I obtain sufficient and appropriate audit evidence? How can I obtain sufficient and appropriate audit evidence regarding opening balances? So what you are supposed to do is you need to perform some audit procedures. As we all know, if you have to obtain sufficient and appropriate audit evidence, what we need to do? Audit procedures we need to perform. Sir, in order to obtain that sufficient and appropriate audit evidence regarding opening balances, I need to perform audit procedures. No, sir. What audit procedures I have to perform? Which audit procedures I have to perform? What exactly I need to verify? So that you need not worry. The standard has helped you here. The standard itself has told what audit procedures you are required to perform. SA 510 itself has told that what audit procedures you are required to perform regarding opening balances. Who is telling it? SA 510 itself has given you the guidance. You need not look anywhere else. So in the objective, they have told you need to obtain sufficient and appropriate audit evidence regarding opening balances. And in order to obtain that sufficient and appropriate audit evidence, what audit procedures you are required to perform, those audit procedures are also given in the same SA 510. You need not look for anywhere. Okay. So if you perform that audit procedures given in SA 510, then you will have the findings. Okay. So let us say you have performed all the audit procedures given under SA 510 regarding the opening balances. Now, by performing that audit procedures regarding the opening balances, you will have your findings, no? You will have your observations, right? See, by performing all the audit procedures, we will have our observations, we will have our findings. So what audit procedures are there? That we will read it in the standard. We will come back to that later. But by performing all that audit procedures or regarding opening balances, you will have different kinds of conclusions, right? You will have different kind of findings, right? So I will divide those findings into broadly 3 categories. Guys, I'm explaining the entire standard to you. Listen carefully. So first conclusion, after you have performed all the audit procedures given under SA 510 regarding opening balances, you might be left with 3 kinds of scenarios. Okay. Scenario number 1, you have concluded that opening balances, you have obtained sufficient and appropriate audit evidence, and you have concluded that opening balances contain no material misstatement. You performed audit procedures, whatever procedures given under SA 510, all the procedures you have performed, and you did not find out any material misstatement in the financial opening balances. So you are all happy now. So tell me, if this is the scenario, what will be your reporting requirements? Which kind of opinion you will give? Assuming all other items are also not containing any material misstatement, even opening balances also do not contain any material misstatement. They are all correctly brought forward. There is no mismatch. Everything was perfectly fine. Tell me which opinion you are required to give. Now I need all your participation, my dear students. We are driving to the important part of the standard. Come on, tell me. If that is the case, what opinion you will give? Excellent. Thanks for participating. Keep this participation like this only. So number 1, unmodified opinion. Very good. Excellent. Unmodified opinion we will give. Second scenario which could be possible is, I performed audit procedures given under SA 510 and I obtained sufficient and appropriate audit evidence that opening balances contain a material misstatement. Opening balances are containing a material misstatement. So I have obtained sufficient and appropriate audit evidence. I performed audit procedures. By performing that audit procedures, I obtained sufficient and appropriate audit evidence. And on that basis, I have concluded that financial statements contain a misstatement. Material misstatement is there. Now, which opinion I am required to give? Which opinion I am required to give? Tell me, guys. Definitely. Modified opinion I will give. 100% modified opinion I will give. Very good. Which kind of modification? Very good, my dear students. So we need to determine, in order to determine which kind of modified opinion. So one thing is very much certain here, either qualified or adverse opinion I will give. Either I will give qualified or adverse. Why qualified or adverse? Why? Because this is a case of availability of audit evidence. I have found that it is a material misstatement. And if I concluded that the misstatement in the opening balances is only material but not pervasive, then I will give qualified. If I concluded that the effect of the misstatement is material and also pervasive, then I will give adverse. Okay. Now, I could be left with one more scenario. After performing all the audit procedures given under SA 510, I could be left with one more scenario. So what is that one more scenario is? Unable to obtain sufficient and appropriate audit evidence. I am unable to obtain sufficient and appropriate audit evidence. Whether opening balances contain a material misstatement or not, I am unable to perform audit procedures. I am unable to obtain audit evidence regarding opening balances. Now you tell me, now what I am supposed to do? If I am unable to obtain sufficient and appropriate audit evidence regarding the opening balances, I am unable to perform my procedures, then what I am supposed to do? So here also you are required to give a modified opinion. But which kind of modification? Very good, my dear students. I told you already, many students will commit a mistake whenever they see non-availability of audit evidence. Directly they will say disclaimer, but that is not the case. Either a qualified or a disclaimer. You have to be very careful here. Either a qualified or disclaimer. So when the possible effect of that undetected misstatement is only material but not pervasive, then qualified. When the possible effect is material and also pervasive, then I will give disclaimer. Then I will give disclaimer. Understood? So these will be my reporting responsibilities. Clear? So I have explained you the almost all majority of the standard I have covered. One of the objective I have explained in a detailed manner. That is what are our responsibilities regarding opening balances. Majorly I have covered, but only thing which we have to learn from the standard is I told you that you are required to perform some audit procedures, no, to obtain that audit evidence regarding opening balances. So what are that audit procedures specifically which you need to perform? That is the only thing pending to be read from the material. Rest of all the content from the material I have explained. The only thing which you have to learn from the standard is audit procedures, what you are required to perform regarding opening balances. So that if we learn, one of the objective will get over. We have another objective in the standard also that will come back to that later. But first, let us go back to the material and try to read the content till now, whatever we have covered. Okay. So first coming to the definitions. First one, initial audit engagement. Sir, what is an initial audit engagement? An engagement in which either the financial statements for the prior period were not audited. Last year financial statements were unaudited. Or the financial statements for the prior period were audited, but by whom? By a predecessor auditor, by a different auditor. Sir, who is predecessor auditor? Predecessor auditor means auditor from a different audit firm. Audit firm should change. That's why I gave you the example. Only if the engagement partner is changing, that we can't call it as initial audit engagement. What should change? The firm should change. So auditor from a different audit firm who audited the financial statements of an entity in the prior period and who has been replaced by the current auditor. So last year some other firm has conducted the audit, and the current year we are replacing him. That person will become predecessor auditor. Now, what is the meaning of opening balance? Let us see. These account balances that exist at the beginning of the period. So opening balances are nothing but which balances existing at the beginning of the period. And these opening balances are based upon closing balances of prior period. And as I have told, they reflect two important information. They reflect effect of transactions and events of the prior periods, and also they reflect accounting policies applied in the prior period. So very, very important. When I say opening balances, it reflects two kinds of information. One is the effect of all the transactions and events which have taken place in the previous year, and also it will reflect what accounting policies are applied in the previous year. Then opening balances also include matters requiring disclosure that existed at the beginning of the period, such as contingencies and commitments. This point also I have clarified. So when I say opening balances, I'm not just talking about the balance sheet items. Those items which are there as a disclosures in the notes to accounts, like contingent liabilities and all, they also will form part of opening balances. Okay, definitions we are done. So as I have told, we have two objectives now. First, we will talk about only first objective. Second objective, we'll talk about it later. First, we will talk about the first objective. So we have two objectives here. First one, we will concentrate now. In conducting an initial audit engagement. So I have told the standard is putting more emphasis on initial audit engagement. So whenever you are conducting an initial audit engagement, the objective of the auditor with respect to opening balance is to obtain sufficient and appropriate audit evidence. Regarding what? So especially when I'm doing an initial audit engagement, I need to obtain sufficient and appropriate audit evidence regarding what? About whether opening balances contain a misstatement that materially affect the current period's financial statements or not. So whenever I'm doing initial audit engagement, it is my responsibility to obtain sufficient and appropriate audit evidence whether opening balances are containing a misstatement that could affect my current period financial statements. I need to obtain audit evidence. If I put it in simple terms, I need to obtain sufficient and appropriate audit evidence whether opening balances are containing a misstatement or not containing a misstatement. I need to obtain audit evidence. That is the first objective. We have one more objective also. I'll come back to that later. Now, so as I was saying, if you have to obtain sufficient and appropriate audit evidence, that we can do it only when we perform audit procedures. No. So what audit procedures you are required to perform regarding opening balances? What audit procedures you are required to perform regarding opening balances? Let us see. So what exactly you will do? So I was saying you need to perform audit procedures, no, to obtain audit evidence. So exactly what audit procedures you will perform? Very simple, guys. What you will do? Let us think practically. What you will do if you have to obtain audit evidence regarding opening balances? First, we will get the last year's copies of the financial statements. Last year audited financial statements, we will get it. So we'll go through the last year audited financial statements, especially that balance sheet, notes to accounts, what kind of balances are there, that will make a note. Then we will ask from the client company, sir, please give me the opening trial balance. In the accounting software, whatever client use, they can download something called opening trial balance, where they will be able to find, where they will be able to get only opening balances without giving effect to the current year transactions. So I will get that opening trial balance from the client. So I will keep side by side opening balances and opening trial balance and also last year balance sheet. I will check whatever balances which are there in the last year's balance sheet, whether the same has been reflected in my opening trial balance of the current year also or not. And this task is not such simple as said. It will take a lot of amount of time. Why? Because when you say trial balance will contain specific account details. All the accounts will be there. Whereas balance sheet will contain summarized information. Like for example, if you open the last year's audited balance sheet, in the balance sheet, you will find trade receivables. Let us say they are telling trade receivables are 8 crores 45,000. 8 crore 45 lakhs. This is the amount of total trade receivable. But when you open the opening trial balance, you will have individual accounts like A account, B account, debit balances like that will be there. So from that individual accounts, you need to identify who is all are classified as trade receivables. You have to add up all their balances. Then you will get the total. If that total should be matching, that total also should come to 8 crore 45 lakhs. So like that trial balance will contain so many individual items, whereas the balance sheet will contain summarized information. We need to match the balances in both, whether last year's opening balance and the current year's opening trial balance, both are matching or not. And also I will see whether any prior period information was identified in the current year, whether last year's information was identified in the current year. So sometimes what will happen is in the current year, I might identify last year's data. So that information should not be adjusted to the opening balances. That information should be shown as a prior period item. That has to be separately disclosed in my P&L as a prior period item. So I will try to identify whether there are any from the current year's audit procedures. I will try to remain alert. Am I finding out any material misstatement regarding last year's transactions? If that is the case, you should not directly go and adjust it to opening balances. You have to show it as a prior period item in the current year's financial statements. So like that, few audit procedures I will try to perform. Let us see what are that audit procedures. This is very, very important. Many a times this paragraph has been asked in the examination. So let us see what audit procedures will be performed regarding opening balances. Auditor shall read most recent financial statements. So what are they saying? You should read the most recent financial statements, if any, and predecessor auditors report thereon, if any, for information relating to opening balances, including disclosure. So first thing what you should do is, what audit procedures you have to perform regarding opening balances is, go to the management, ask them copy of the last year's audited financial statements, and also ask them to share with you the last year's auditor's report and check the balances. Check what has the auditor given any comment regarding the last year's closing balances and all. Next, the auditor shall obtain sufficient and appropriate audit evidence about whether opening balances contain a misstatement that affect the current period financial statements by doing what. So by performing what, he will try to obtain sufficient appropriate audit evidence. So first thing, he will get the last year's audited financial statements and last year's auditor's report. Okay. After that, what he will do? Number one, determine whether prior period closing balances have been correctly brought forward to the current period, and where appropriate, any adjustments have been disclosed as a prior period item in the current year statement of P&L. That's what I have told. Whatever last year's closing balance is there, that has to be as it is brought forward as a current year's opening balances. So I will try to check whether last year's balances are as it is brought forward as a current year's opening balances. And if I find in the current year, if they find any item related to previous year, they should not go and directly adjust the opening balances. In fact, they have to show it as a separate prior period item in my statement of P&L. Whether they are doing it or not, I need to check. That is the first thing. Okay, so determine whether prior period's closing balances have been correctly brought forward to the current period, or where appropriate, any adjustments have been disclosed as prior period items in the current year statement of P&L. Then determine whether opening balances reflect application of appropriate accounting policies. Even as I have told you, when you are verifying the opening balances, it will also reflect what accounting policies they have followed. No, opening balances reflect the effect of transactions or events. At the same time, opening balances also reflect what accounting policies were followed. So you will also get to know by verifying opening balances what accounting policies were followed in the previous year. Now you determine once whatever accounting policies they have followed, are they appropriate or not? Have they followed correct accounting policies or not? Like when I was verifying opening balances of assets, I came to know that the client is charging SLM method of depreciation. Now I need to determine whatever SLM method of depreciation they have followed, is it appropriate? You tell me when SLM method of depreciation will be appropriate. SLM method of depreciation will be appropriate when the expected consumption pattern of the machinery is going to be uniform throughout its useful life. If the asset is expected to be used uniformly throughout the useful life, then only SLM method of depreciation will be appropriate. So I need to determine whether really the assets will be used uniformly throughout its useful life. So that I need to obtain audit evidence. So determine whether opening balances reflect application of appropriate accounting policies and perform one or more of the following, and specifically try to perform the following procedures. What are they? Number one, where the prior year financial statements were audited, perusing the copies of the audited financial statements, including other relevant documents relating to prior period. Repeated point. Specifically, what you should do is, if last year financial statements were audited, get the copies of the last year's financial statements along with all the relevant documents, and evaluate whether audit procedures performed in the current period provide evidence relating to opening balances. Sometimes we perform audit procedures on the current year transactions, but they will give us audit evidence regarding opening balances. Sometimes we perform audit procedures for the current year transactions, but that will give you audit evidence regarding opening balances. I will give you one example. We are conducting audit of the financial year 24-25. Okay, I've started verifying. So I got to know that on 5th of April 2024, a debtor has gone bankrupt. An order has been passed that so and so debtor, Mr. A, has gone bankrupt and nothing, zero is recoverable from his account. See, if this information I got to know on 5th of April 2024, that means there should be some provision, there should be 100% provision existing as on 31st of March 2024. If I got the judgment within 5 days, that means as on the last year's financial statements date preparation, this information management might have already been aware. They should have created 100% provision for this debtor. So if the last year, in the last year's closing balance, if they have created 100% provision, whether that 100% provision is correct or not, that evidence you are getting it from current year's audit procedures. So like that, sometimes while performing the audit procedures on the current year financial statements, you might get evidence regarding opening balances. Check whether any such evidences you are able to get it, and also perform specific audit procedures to obtain evidence regarding opening balances. And you need to perform certain specific audit procedures regarding opening balances. So what are that specific audit procedures? They will try to say it here. They will try to say it here. Yeah, here they say what are that specific audit procedures you need to perform. Like for when it comes to current assets and liabilities, what specific audit procedures you need to perform regarding opening balances. For non-current assets and liabilities, what specific audit procedures you need to perform, that they try to explain it here. We will come back to that later, but broadly, if I have to say, broadly what audit procedures you will try to perform regarding opening balances. First one, we'll get the copies of the last year's audited financial statements and last year's auditor's report. Then we will proceed further by performing audit procedures whether opening balances contain a material misstatement or not. How? Number one, so we will check whether last year's whether last year figures are correctly brought forward in the current year, and any adjustments to the previous year have been disclosed as a prior period item. Number two, whether opening balances reflect appropriate accounting policies or not. Number three, performing one or more of the following, like getting last year's financial statements along with all the relevant documents, evaluating whether audit procedures performed in the current year provide evidence regarding opening balances, and also you need to perform specific audit procedures. Sir, what are that specific audit procedures? Let us see. Here is what they say. So audit procedures regarding current assets and liabilities. So when it comes to opening balance of current assets and liabilities, to obtain evidence regarding it, what specific audit procedures you will perform? So when I say current assets, all this are trade receivables, inventory, cash and cash equivalents, sundry creditors. When I say current liabilities, sundry creditors, short-term borrowings, short-term provisions will come. So when it comes to short-term, current terms and current assets and liabilities, what procedures you will perform to try to obtain evidence regarding opening balances? Let us see. For current assets and liabilities, some audit evidence about opening balances may be obtained as a part of current year's audit procedures. As I've told, when it comes to debtors, creditors, whether debtors balance is correct or not in the last year, whether creditors balance is correct or not in the last year, inventory balance of opening balance is correct or not, some evidence we can get it from current year's procedures. Like for example, there is an inventory of 100 crores lying as on 31st of March, opening balance. Whether this inventory is correct or not, I can get to know it by verifying the sales which have taken place in the current year. Let us say, for example, on 5th of April, if the company has raised a sale invoice amounting to 80 crores, from 1st of April till 5th of April, they did not purchase even single thing. But still, if they are able to make a sale of 80 crore, that is giving me evidence that 80 crores worth of stock might be lying there as on 31st of March. So like that, when it comes to current assets and liabilities, we can get evidence regarding, we can get some portion of evidence of audit evidence regarding opening balances as a part of current year's audit procedures. In the case of inventories, however, current period's audit procedures on the closing balance provide little audit evidence regarding inventory on hand at the beginning of the period. So even that current year procedures also will give more evidence regarding other current assets. Even though for inventory we get little bit of evidence, but when compared with other items, very little evidence we get regarding inventory from the current year's audit procedures. So that's what they say here. In the case of inventories, however, current period's audit procedures, let me read it once again. In the case of inventories, however, current period's audit procedures on the closing inventory balance provide little evidence. They will give evidence. I'm not saying they will not give evidence. They will give evidence, but they will provide little evidence regarding inventory on hand at the beginning of the period. Therefore, additional audit procedures may be necessary. So that's why when it comes to inventory opening balance, we need to perform additional procedures. And one or more of the following may provide sufficient and appropriate audit evidence. So if you want to obtain audit evidence regarding inventory opening balance, specifically you need to perform the below mentioned procedures. What are they? Observing a current physical inventory count and reconciling it to the opening balances. So to know whether opening balance is correct or not, what you can do is you can attend the management's current year's closing inventory as on the current year's balance sheet date. Let us say, for example, you are conducting audit for the financial year 24-25. Now, as on 31st of March 2025, management will conduct physical inventory. They will call you all that we have seen in SA 501. No. So you have to go and attend that inventory counting. So you need to find out whether stock as on 31st of March is matching or not. Now you do reconciliation to the opening balance. What you should do? To that stock which is there as on 31st of March, add all the sales which are made in the financial year 24-25. Add it. Reduce all the purchases, whatever you have made in the financial year 24-25. And any normal waste, abnormal waste, all that adjustments you do it. By doing it, you will arrive at the opening balance figure. This figure you match it with the opening balance. So this could be one procedure where I can perform on inventory to know whether opening balance is correct or not. Right? Next. Or performing audit procedures on the valuation of opening inventory items. So even you try to perform some audit procedures on valuation, how the opening items, how the opening inventory, how the opening balance of inventory has been valued, you try to perform audit procedures on it. What is the opening quantity of inventory, which value they have used, cost they have used, or NRV they have used, that you can perform. And also perform audit procedures on gross profit and cutoff. Even you can perform audit procedures on gross profit, whether opening balance of inventory is correct or not. That you can also get to know by doing the gross profit comparison. What is the gross profit of the current year? What is the gross profit of the last year? So if there is a huge change in the gross profit, one way by which client can manipulate the gross profit is by making changes to the stock value. So as you all are aware, how the gross profit will be calculated, my dear students. So we'll have sales, we will have closing stock, right? From here we have opening stock. To opening balance we have, and to purchases and direct expenses we have, gross profit will be there. So gross profit percentage is how much? Gross profit divided by sales into 100. So if you increase the value of the inventory, gross profit percentage will increase. If you decrease the value of the inventory, gross profit percentage will decrease. So no. Why? Because the closing stock is directly going to have an impact on gross profit. So what you do is calculate the gross profit percentage of the current year, calculate the gross profit percentage of the last year, current year and last year. See, if there is no significant change which has taken place, gross profit percentage should remain same. Gross profit percentage should remain same. But if I'm finding any huge differences between the current year gross profit and last year gross profit, might be there is a chance that inventory of one of these years could have been manipulated. So like this, even you can perform gross profit related procedures, and even you can perform something called cutoff test. That means how I will do cutoff test is close to the balance sheet date. Close to the balance sheet date, I will verify last 5 days before and 5 days after transactions. I will check when the risk and reward is getting transferred. So I will take the balance sheet date. Let us say, for example, 31st of March 2024 is the balance sheet date. No, 5 years before and 5 years after. 5 days before and 5 days after. I will see what sales and purchases have taken place, and whether risk. If I'm recording sales, I should record only those sales whose risk and reward has been transferred. I should record only those purchases whose risk and reward has been transferred by my received by my client company. So I need to perform that cutoff procedures also. By that also you can get to know whether the stock lying as on the opening balance sheet date is correct or not. So more about cutoff we will get to know about it in the audit of items of the financial statements. So once again, very important guys, many times I've asked a question from this also. So what specific procedures you need to perform regarding current assets and liabilities? If I give you a summary of this paragraph, first point they are telling that Yes, when it comes to current assets and liabilities, the audit procedures of the current year will give evidence. When it comes to inventory also, the audit procedures of the current year will give evidence regarding opening balance, but they will give little evidence. To determine whether opening balance of inventory is correct or not, you need to perform some specific procedures, like you can attend the current year's inventory counting and reconcile that balance to the opening balances. You can perform audit procedures on the valuation of the inventory, and even you can do the comparison of the gross profit and the cutoff procedures. Clear? Okay, so we have seen what audit procedures you need to perform regarding current assets and liabilities. Now, what audit procedures you need to perform regarding non-current assets and liabilities? So, what are non-current assets and liabilities? Like this, fixed assets, long-term borrowings, these will come under non-current assets and liabilities. So here this is simply few things here, such as property, plant and equipment, investments and long-term debt. Some audit evidence may be obtained by examining the accounting records and other information underlying the opening balances. So you can check the supporting documents regarding the opening balances. From that, you can get the evidence. Like for example, if you want to know opening balance of inventory, not inventory. So if you want to know opening balances of long-term borrowings, you can check the supporting documents. Like for example, they have an outstanding loan, long-term loan is there. If you want to know whether that loan is correct or not, loan's opening balance is correct or not, you can check the loan document, interest calculation and all. So some evidence you can get it regarding opening balances of non-current assets and liabilities by examining the accounting records. In certain cases, auditor may not be able to obtain some audit evidence regarding opening balances through auditor may be able to obtain some evidences regarding opening balances through confirmation with the third parties. So like in some cases, especially this loan, long-term borrowings and all, you can get to know whether opening balance is correct or not by getting a confirmation. You need not restrict your usage of external confirmation only with regard to opening balances. You can also extend that external confirmation procedure to obtain evidence regarding even opening balances as well. Okay, right. So these are all the audit procedures we have to perform. So the first point they have told overall what audit procedures are there. In that they asked us to perform specific audit procedures, and that specific audit procedures they have explained it in the fourth point and fifth point. What are specific audit procedures regarding current assets and liabilities? What are specific audit procedures regarding non-current assets and liabilities? Now we have one more paragraph regarding audit procedures, which is nature and extent of audit procedures. So once again, I have already covered this. I have already told you what is the meaning of nature, timing, and extent of audit procedures. Now what they say here is, what nature, extent of audit procedures you will perform on opening balances, that depends on what factors. That means whether will you perform more audit procedures on opening balances, whether will you spend more time on audit procedures on opening balances, or will you perform less nature of audit procedures or less number of audit procedures on opening balances. It depends on what factors. It depends on what factors. So keeping what factors in mind, you will take the decision that regarding nature, timing, and extent of audit procedures on the opening balances. See, our main work will be on current year transactions and current year closing balances. But because of SA 510, we are also required to spend some time on opening balances. But keeping what factors in mind, you will decide your nature, timing, and extent of audit procedures. Let us see. The nature and extent of audit procedures necessary to obtain sufficient appropriate audit evidence regarding opening balances depend on some matters. So what nature and extent of audit procedures you will perform on opening balances, that depends on some matters. What are they? It depends on what kind of accounting policies the client is following. It also depends on nature of account balances, class of transaction and disclosure, and also the risk of material misstatement. It also depends on the nature of that item and also its risk. If the risk is high, more audit procedures I will perform in opening balances. If the risk is low, I will perform less audit procedures. And also it depends on significance of the opening balances. Once again, materiality, whether opening balances are more material, whether they are large amounts, then I will spend more time. If on the other hand, insignificant opening balances are there, less amount of time. And whether prior period financial statements were audited, and if so, whether predecessor auditor's opinion was modified. If the last year financial statements are audited and if the last year's financial statements contain a modified opinion, then I need to spend more amount of time on opening balances. Able to understand? So the nature and extent and timing of audit procedures regarding opening balances, the auditor himself will decide on the basis of professional judgment. But while taking that decision, he has to consider various factors. What are they? What accounting policies are being followed, nature of the item and risk of material misstatement, significance, and also whether last year's financial statements were audited. If yes, whether it contained a modified opinion. The auditor will consider all these factors and accordingly determine nature, timing, and extent of audit procedures. Clear everyone till here? What audit procedures auditor will perform regarding opening balances? Everybody comfortable with the discussion? Right. So after performing all these audit procedures, now you have to consider your reporting requirements. That reporting I have already explained. Like if you see here, audit conclusions and reporting in regard to opening balances. So how you will report after you have performed all the audit procedures here, you will have the findings. Depending on that findings, how you will report. So if the auditor concludes that opening balances contain a misstatement, concluding means what? When I say auditor has concluded means he has confirmed. When he will confirm, when he is having sufficient and appropriate audit evidence, he will conclude, or when he doesn't have a sufficient and appropriate audit evidence, he will conclude. Tell me, my dear students. If they are saying if the auditor concluded, when the auditor will arrive at a conclusion, when he is having evidence, he will arrive at a conclusion, or when he is not having evidence, he will arrive at a conclusion. Come on, respond, please. If you respond, then only I will proceed further. Very good, Ashwant. So when auditor has concluded, that means when the auditor is concluded means auditor is having sufficient and appropriate audit evidence. So if the auditor concludes that opening balances contain a misstatement that affect the current period's financial statements also, and the effect of the misstatement is not properly accounted or disclosed in the financial statements. So when you have obtained audit evidence and you have concluded that financial statements opening balances contain a misstatement and it was not affected and it was not properly presented or accounted in the financial statements, then what opinion you will give? You will either express a qualified opinion or an adverse opinion as appropriate in accordance with SA 705. So what you will do, that's what even I have also explained here in my discussion. If you have obtained audit evidence that opening balances contain a material misstatement, either you have to give a qualified opinion or you have to give a adverse opinion depending on materiality and pervasiveness. On the other hand, if the auditor is unable to obtain sufficient and appropriate audit evidence regarding opening balances, the auditor shall express either a qualified opinion or disclaimer of opinion as appropriate in accordance with SA 705. That's what even we have also covered here. If you are unable to obtain audit evidence, you have to give the modified opinion, either qualified or disclaimer. See, this first point doesn't require any specific mention. This need not be stated separately. When you have performed audit procedures on the opening balances, when you found that there is no material misstatement, you have to give unmodified. Do they need to state this also in a separate line? Not required. It is implied, no? So that's why they have stated the first and second points, the second and third points. This doesn't require any specific mention. Why? Because it is always implied. Okay, so with this we have completed discussion regarding one objective. We are not done with entire standard. We are done with almost 80% of the standard we are done. But one thing was pending. What is pending is when we are reading the objective paragraph, I read only one objective. We have one more objective which is required to be fulfilled from the standard. Sir, what is that one more objective which is required to be fulfilled? 10 minutes, guys, the standard will get over. Listen carefully. So now let us come to the second objective. What is the second objective about? See, if you remember, I told that opening balances reflect two kinds of information. What are the two kinds of information opening balance will reflect? Opening balance will reflect the effect of transactions and events taken place during the financial year. And opening balances also reflect accounting policies which are followed in the preceding financial year. Opening balances also reflect accounting policies which are followed in the preceding financial year. Now, whenever I say accounting policies, there is one fundamental accounting assumption associated with accounting policy. Can somebody name that fundamental accounting assumption? See, we have three fundamental accounting assumptions in the process of preparation of the financial statements. And out of that three fundamental accounting assumption, one such fundamental accounting assumption is related with the accounting policies. I want to know what is that one of the fundamental accounting assumption related with the accounting policies. Tell me which of the fundamental accounting assumption. First of all, I hope you all are aware what are the three fundamental accounting assumptions. Okay, let me name it. The three fundamental accounting assumptions are going concern, accrual, and consistency. The three fundamental accounting assumptions are going concern, accrual, consistency. Very good. Out of these three, which one is related to accounting policies? Very good, my dear students. Consistency. Consistency is one of the accounting policy linked with the accounting policies. Now, what do you mean by consistency? When I say consistency as a fundamental accounting assumption, what do I mean by that? So what do I mean by that is, when it comes to accounting policies, you cannot change it as per your wishes. You can't say in financial year 23-24, I will follow one kind of accounting policy and I will change that accounting policy in financial year 24-25. Can you say that? Definitely not. You can't say that in financial year 24-25, I'll follow SLM method and in the next year, I will change it to the WDV method. Can you change it in whatever manner you want? No. So year after year, the same accounting policies are required to be followed. Year after year, there should be consistency. Whatever accounting policies that you have followed in the previous year, the same accounting policies are required to be followed in the current year also. That assumption, we call it as consistency. So don't you think I need to check when I'm checking opening balances? Since opening balances are also reflecting accounting policies, don't you think I have a responsibility to check whether that accounting policies are consistently applied year after year? Like the way I'm obtaining audit evidence regarding opening balances, amounts, and all, don't you think I'm having a responsibility to obtain sufficient and appropriate audit evidence regarding the consistency of accounting policies? So, since by verifying accounting policies, I'm even getting to know what kind of accounting policies they have followed in the preceding financial year. So, now it is my responsibility to check whatever accounting policies which are followed in the preceding financial year are consistently applied in the current financial year or not. I need to obtain evidence regarding consistency of accounting policies also. That is the second objective. So, second objective will talk about accounting policies consistency. Okay, and one more thing here, guys. When I say consistency, year after year accounting policies also all must be consistent. Does that mean I will never be permitted to change my accounting policies? As per the consistency assumption, will I never be permitted to change my accounting policies? No, guys. In some circumstances, if there is any valid reason, if there is any genuine reason, and there are some things given in the standard, if those, because of that reasons, if there is a genuine reason for the change, you can change your accounting policy provided there is a valid reason. But whenever you are changing the accounting policy, that too because of a valid reason, like for better presentation or whatever reasons it is required by law or statute, something like that, they will try to say. So in case if you are changing the accounting policy and there is a valid reason for that, and if it is permitted by the standards also, but what the standard says is you have to give a proper disclosure regarding that change in accounting policy. In case if you are changing an accounting policy because of some valid reason you have for that, that's why you are changing the accounting policy, and even permission from the standard is also there. In those cases, you can change the accounting policy, but there, what is the requirement is the management should clearly disclose about that change in accounting policy in their financial statements. A proper disclosure is required. 100% clear disclosure is required. So, if I take this entire discussion into context, as an auditor, when it comes to accounting policies, my objectives are two. Number one, without any valid reason, there should not be any change. Consistency should be there. So, if there is no valid reason, without any valid reason, without any genuine reason, accounting policies should not be changed. So, whether the accounting policies are consistently applied or not, I need to obtain audit evidence. Or if there is a reason when change is permitted, in case if they have changed the accounting policy and there is a permission from the standard also to do it, in that case, I need to check whether there is a proper disclosure. Whether there is a proper disclosure of the change. So two things I need to obtain audit evidence, my dear students, with regard to accounting policies which are reflected from opening balances. Number one, whether accounting policies are consistently applied. Without any valid reason, without any valid thing, the accounting policy should not be changed from year after year. So whether accounting policies are consistently applied or not. Or in case if there is a valid reason for change in the accounting policy, then I need to check whether it is properly disclosed or not. So if any of this thing is missing, like let us say for example, if there is a change, if it without any valid reason, the client has changed the accounting policy. Listen carefully to the words which I'm using here. Without any valid reason, the client has changed the accounting policy. Or there is a valid reason, that's why the client has changed the accounting policy, but he did not give the disclosure. In any of that cases, I have to give the modified opinion. Either without any valid reason, accounting policy has been changed. That means consistency has been violated. Or there is a valid and genuine reason and permissible from the standard to change the accounting policy, but the client has not given a proper disclosure of the change in accounting policy. In those cases, I have to give a modified opinion. In those cases, I have to give a modified opinion. Understood? That's all. This is what the responsibility of the auditor regarding the accounting policies, which is the second objective from the standard SA 510. There are some few more things are there which are required to be discussed, that we will read it and finish it. Okay. So if you come back to the standard, once again, if I read the objective, while conducting an initial audit engagement, objective of the auditor with regard to opening balances is to obtain sufficient and appropriate audit evidence about first objective. We are already done. I'm not reading it. Second objective. So you need to obtain sufficient and appropriate audit evidence whether appropriate accounting policies reflected in the opening balances have been consistently applied. So you need to obtain audit evidence that opening balances have accounting policies reflected in the opening balances are consistently applied in the current period's financial statements, or changes thereto are properly accounted for and adequately presented and disclosed. If at all there is change happening because of a genuine or valid reason, then I need to check whether that changes to the accounting policy are properly accounted and are adequately disclosed and presented in accordance with the applicable financial reporting framework. That's what I was saying. Number one, whether they are consistently applied or not. In case if there is a genuine reason for the change, it has been properly accounted for and disclosed or not. For these two things, I need to obtain audit evidence. Then, sir, what audit procedures you will try to perform regarding opening balances? Same paragraph they will repeat. Whatever we have read in the opening objective paragraph, the same thing they will say. So as an auditor, you shall obtain sufficient and appropriate audit evidence. About what, sir? Whether accounting policies reflected in the opening balances have been consistently applied in the current period's financial statements. And if there is any change in the accounting policy, it has been properly accounted for and adequately presented and disclosed, that too in accordance with the requirements of the applicable financial reporting framework. The same objective paragraph has only repeated once again. Then, what are your reporting requirements? So when it comes to when you have started verifying that accounting policies and changes are properly disclosed or not, if you come to the conclusion that okay, accounting policies are either without any valid reason they have changed it, or there is a valid reason that's why they have changed it, but they are not adequately presented or disclosed, you will give a modified opinion. So let us see here. So if the auditor concludes, what do you mean by concludes? Once again, concluding means what? Did the auditor has sufficient and appropriate audit evidence or doesn't have sufficient and appropriate audit evidence? Tell me, my dear students, participate. When I am saying if the auditor is concluding, when I say auditor has concluded, is it a case of having evidence or not having evidence? When he will arrive at a conclusion, having evidence or not, not having evidence? So when I say auditor is concluding, that means he is having a sufficient and appropriate audit evidence. So auditor is having sufficient and appropriate audit evidence and concluded that the current period's accounting policies are not consistently applied in relation to opening balances in accordance with applicable financial reporting framework. That means last year's accounting policies are not consistently applied, which means what? Without any valid reason, they have changed the accounting policy, or a change in the accounting policy is not properly accounted or disclosed. This when there is a genuine reason. So first point, there is no valid reason and change has happened. There is no valid reason, but they have changed the accounting policy, or a change in the accounting policy is not properly accounted for or not adequately presented or disclosed in accordance with the applicable financial reporting framework. That means there is a valid reason. There is a valid reason and also permitted under the standard to change the accounting policy. That's why they have changed it. But what they have done is they have not properly accounted for or they have not adequately presented or disclosed about that change in accordance with the applicable financial reporting framework. So in that case, since auditor is having evidence, no conclusion I'm saying. So when I'm saying conclusion, evidence is there. So auditor is having sufficient and appropriate audit evidence and he has concluded that accounting policies contain a material misstatement. Either they are not consistently applied, or even if they are consistently, even though there is a change because of valid reason, that change was not properly accounted and disclosed. So auditor is having sufficient and appropriate audit evidence and he has concluded that accounting policies contain a material misstatement. Now what opinion should be given? Tell me, my dear students. Since it is a case of availability of audit evidence, what opinion I should give? So you all will say, yes, sir, either I will give qualified or adverse. If the accounting policies, if just one or two small accounting policies are violated, then I will give, if the effect is only material but not pervasive, I will give qualified opinion, sir. However, if many accounting policies are not consistently applied or changes are not disclosed, whose effect is material and also pervasive, I will give adverse, sir. That's what they say here. So then in such case, as an auditor, you are required to give a qualified or an adverse opinion in accordance with SA 705. Now, you all should get one doubt. You all should get one doubt. If you are not getting that doubt, let me plant that doubt in your mind. You all should have got it. You all should have got a doubt. But if you have not yet got the doubt, I will plant it out in your mind. Guys, if you remember, when we are discussing about reporting regarding opening balances, they have told two cases. When auditor obtained audit evidence that opening balances contain a misstatement, what you are supposed to do. When the auditor is unable to obtain audit evidence, what you are supposed to do. But when it comes to auditors' reporting responsibilities, when it comes to accounting policies, they spoke about only one case. They are talking about only one case. We have sufficient and appropriate audit evidence regarding accounting policies. They did not give the other case. Sir, what if auditor is unable to obtain sufficient and appropriate audit evidence regarding opening balances? Regarding accounting policies, sorry. So when it comes to accounting policies, they gave us the reporting requirements. When we have evidence, what are our reporting requirements? When we are unable to obtain audit evidence, what are our reporting requirements? Both they have explained, sir. When in the case of what opening balances. But when it comes to consistency in accounting policies, they are only giving one case. What is that one case they are giving? So when the auditor has obtained sufficient and appropriate audit evidence regarding consistency of accounting policies containing a material misstatement, you have to give either qualified or adverse. But with that, they have ended, sir. They did not give a case where auditor is unable to obtain audit evidence regarding accounting policies. What he is supposed to do? They should have given about that qualified or disclaimer also, no, sir. Why they have not given it? Why they spoke about only one case regarding availability of evidence when it comes to accounting policies? Guys, did you get this doubt? Or if you have not got the doubt, whatever doubt which I am putting it before you, do you think is that a valid and genuine doubt? Did you got the point? What is the doubt which I am putting it before you? Did you get that point? Come on, tell me, say yes or no. Does my doubt sound valid to you? You should have also got it right. Respond, my dear students. Respond, please, quickly. Yes, valid doubt, no? So, the doubt is valid, but the answer for this is you should not be in such a scenario. You cannot be in a scenario being a chartered accountant, since we are the chartered accountants having expertise in the area of accounts and audit. We cannot say I'm unable to obtain sufficient and appropriate accounting evidence. I'm unable to get sufficient and appropriate evidence regarding accounting policies. Because even earlier also I have told, the people who are having expertise in the area of accounts and audit is you and me, chartered accountants. If you say, sir, I'm unable to obtain audit evidence whether clients' accounting policies are consistently applied or not, that means you don't deserve to be a chartered accountant, no. Because you are supposed to be an expert in the area of accounts and audit. So you should not say, sir, I'm unable to perform audit procedures and obtain audit evidence regarding accounting policies, whether they are consistent or not. You can't say that, then you don't deserve to be a chartered accountant. You have to compulsorily get the evidence regarding accounting policies. You should be in a position to judge, man. Why? Because you are an expert, no, in the area of accounts and audit. So how can you say I am unable to comment, I am unable to obtain evidence regarding accounting policies? So you should not say that. It will be a shame on our profession. Okay. So that's why they have told when it comes to accounting policies, only one case, you must obtain audit evidence regarding consistency of accounting policies, because you are an expert in that area. You can't say that I don't have evidence. I'm unable to perform procedures regarding accounting policies, because we are experts in the area of accounts and audit. Understood? Clear and comfortable? Right. So with this, most of the standard we are done. So only one more last paragraph we have. Modifications to the opinion in the predecessor auditor's report. Now, what does this paragraph say is, let us say, for example, I am conducting audit for the financial year 24-25. Last year, 23-24, these financial statements were audited. And this audit was done by some predecessor auditor, not me. Last year, audit was done by some predecessor auditor. And last year auditor, while conducting audit of the last year financial statements, he gave a modified opinion. Last year, predecessor auditor gave a modified opinion on the prior year's financial statements. Now I am conducting the audit of the financial year 24-25. You tell me, just because last year's audit report contained a modified opinion, is there any mandatory requirement for me to compulsorily modify the current year's report also? Do you think current year auditor will be under an obligation to give a modified opinion just because the last year's auditor's opinion contains a modified opinion? Or if I put it in even more simpler terms, if the last year auditor has given modified opinion, is it compulsory for the current year auditor also to give modified opinion? No, guys. If that compulsion exists, no. Once a company gets the modified opinion, never back in its life it will get a unmodified opinion. So no standard says that just because last year's auditor contained modified opinion, you have to also compulsorily give modified opinion. No standard says it. Even SA 510 also doesn't say it. So when you will modify is if when the need for modification will arise is because of whatever reason last year auditor gave the modified opinion. If that reason remains relevant, material, unrectified in the current year also, then he will modify. If the reason because of which predecessor auditor gave the modified opinion, if that is no longer relevant, no longer material, or if it is already sorted in the current year, no need to modify just because of the fact that last year auditor has given a modified opinion. So that's what they say. If the predecessor auditor's opinion regarding the prior period financial statements included a modification to the auditor's opinion, and if that remains relevant and material to the current period financial statements, then only you will modify the current year's auditor's opinion. That means if because of whatever reason last year's auditors gave a modified opinion, if that is no longer relevant, no longer material to the current year, or if it is already rectified in the current year, then you need not modify it. But however, because of whatever reason last year auditor gave modified opinion, if that continues to remain relevant for the current year also, if that continues to remain material for the current year also, then only you have to modify your opinion on the current period financial statements. Understood? Clear and comfortable? That's all. This is what point number G is all about. So a quick recap, what and all we have covered in SA 510. So first we have understood definitions. Three definitions we have understood. What are they? What is opening balance? What is initial audit engagement? And who is a predecessor auditor? Then we have covered objectives. How many objectives? Two objectives we have covered. One is regarding opening balances. Other one is regarding accounting policies, consistency. Then we have seen what audit procedures are required to be performed. We have seen audit procedures for opening balances also. We have seen audit procedures for accounting policies also. Then reporting matters we have seen. So we have seen reporting for opening balances also. We have seen reporting for accounting policies also. And then finally, we have seen what if there is a modification in the predecessor auditor's report when you will modify the current year's opinion. So that small paragraph also we have seen. That's all entire SA 510 is all about. Guys, can you give me one quick confirmation that you guys are able to understand the content from SA 510? Respond, please. Is a concept very, very clear? It should be crystal clear now. I told you, no, I will make you remember, learn, memorize everything in the classroom itself. Just I need your complete attention. Very much comfortable with the standard? Good. So now I have a small need from you. So just to take some 5 minutes of the time. 5 minutes is also more. So just to take some 3 to 4 minutes of the time, just to give a quick glance of the entire standard. Quick glance, quickly go through all the content in the standard. Just 3 to 4 minutes you spend it there and try to go through the standard. We'll try to solve the questions and immediately, we'll solve the questions and we'll take one short break. After that, we'll start the next standard. Okay, come on, do it everyone. Just take some 3 to 4 minutes of the time. Go through the entire SA 510. You have to make it fast, very fast. Come on, do it. Right. So since you are done with going through the content of the standard, so now we will try to solve the question bank. Right. So we'll try to do test your knowledge questions. I could not find anything from the test your understanding. So in the first question under test your knowledge, question number 1 now. So I need you to make one small change. Instead of 510, I have kept it as I say 501. So please do note it. Anyhow, if you read the question, you will get to know. And even this point reference and all I have given correctly only. So an auditor is appointed for the first time for audit of accounts of an entity. The accounts of the previous year were unaudited. So if they're saying the previous year were unaudited, that means in the current year it will become a what? It will become an initial audit engagement. So an auditor is appointed for the first time for audit of the accounts of the entity. The accounts of the prior year were unaudited. So definitely it is an initial audit engagement. He is unable to obtain sufficient and appropriate audit evidence regarding opening balances. What is his responsibility in this regard? So tell me, if you are unable to obtain evidence regarding opening balances, what you are supposed to do? You are required to give a disclaimer of opinion or a qualified opinion. But how you will present the answer is first you write it that entire content under the paragraph requirement, like when you have evidence, what are the entire reporting responsibilities, then add a concluding statement. Since in the given case auditor is unable to obtain audit evidence, is required to give either a qualified or disclaimer. Okay, right. Next. This is also straightforward question. Discuss the objectives of the auditor with respect to opening balances. Straightforward question, my dear students. What are responsibilities of the auditor with regard to opening balances? So objectives you are required to write here. Two objectives: obtain sufficient and appropriate audit evidence regarding opening balances, and also try to obtain evidence regarding accounting policies. Then PQR and Associates are the statutory auditors of TUV Limited for the financial year 22-23. They have been appointed as statutory auditors of TUV Limited for the first time. Once again, initial audit engagement. What is the objectives of the auditor in terms of SA 510? Straightforward question. Next one. Pankaj and Associates, Chartered Accountants, have been appointed as an auditor of ABC Limited. CA Pankaj did not apply and audit procedures regarding opening balances. He argued that since financial statements were audited by the predecessor auditor, therefore he is not required to verify them. Is CA Pankaj is correct? See, first of all, it is a initial audit engagement. Why? Because in the question itself, they have told that last year financial statements were audited by predecessor auditor. So clearly, it is an initial audit engagement. And whenever it is an initial audit engagement, what does SA 501 specifically say? In the SA 510 specifically say that you are required to obtain sufficient and appropriate audit evidence regarding opening balances. But what auditor is saying, he will say that he's saying that since last year it was audited by another person, he will not verify opening balances. Is CA Pankaj approach is correct? Definitely not. So that's what they say. So first they have defined what is an initial audit engagement. Then they told from the above it is quite clear that CA Pankaj is not correct in his approach and therefore would be required to follow the initial audit engagement and also apply audit procedures regarding opening balances. So what procedures you are required to perform regarding opening balances, that also they have elaborated. So you shall read the most recent financial statements and what specific audit procedures you are required to perform. So that all they have given it here. These are your responsibilities. This we have already covered. 265, 570, 450, SQC1, so 220. Then this all we are done. Illustrations we don't have any. Let us come to RTP MTP questions. So 550, 570, 220, 580, 501 we have already covered it. Then we have this general information, and this is regarding 579 internal audit. 501 we have covered. Those started with the guidance of 265. 710, 560, 265. Letter of specific inquiry 501 already covered. 580. Then we have 20, 710, 570, 710, 510. We have here one question. Let us see. The newly appointed auditor of BTN Limited wants to obtain sufficient and appropriate audit evidence about whether opening balances contain a misstatement that materially affect the current period's financial statements. What audit procedures you are required to perform? Straightforward question, no? So when it comes to opening balances, what audit procedures you are required to perform? That's all. Next. I think no much questions are there. Somewhere at the end I was able to find a few questions. Sales and transfers, opening balances 260, 710. We have 510. We have here. We have one question. Dheeraj and Associates, chartered accountants, have been appointed as statutory auditors of Spice Limited for the financial year 2024-25. CA Dheeraj relied solely on prior year's audited financial statements and did not apply any audit procedure regarding opening balances. He was of the view that since the financial statements were audited by the predecessor auditor, therefore he is not required to verify them. Whether viewpoint of CA Dheeraj is correct? Definitely not. Repeated question, just names they have changed. You need to definitely perform some audit procedures regarding opening balances. What are they? That also we have covered. Next one. This is regarding subsequent events. The indicators of deficiency is 550. non-compliances, moderate level of assurance, going concern, many questions we have. Litigations and claims, SA 501, 580, 570, SQC 1, this we have covered, 265, misstatement 450, audit review general question, AS9, 570, 81, 501, subsequent events 84, observation current inventory count, 710, professional standards 570, integrity 610. That's all my dear students. Very limited questions we have from say 510, but in MCQs they are testing very frequently. They are testing it in the MCQs, so that's why I have explained all the intricacies involved. Very frequently they tested in the MCQs. If there is no question from descriptive, then definitely we will find one question in the MCQ part. Okay, so whatever it is, so 510 we are done. So now we will take one break. After the break we will continue our discussion. Okay, so as usual 20 minutes of the break we will take. So now the time is 10:45. Please do come back at 11:05. We will resume our class. Okay, right.